Imagine this. It's 1942. A skinny 11-year-old boy in Omaha, Nebraska, walks into a brokerage office with $114.75 in his hands. That boy was me, Warren Buffett. I bought 3 shares of Cities Service preferred stock. I thought I was about to strike it rich. But here's what happened. The stock went down, way down. My heart sank. I panicked and sold too early. A week later, the stock shot up, way past my selling price. That mistake taught me one of the most valuable lessons of my life. Patience is the real secret in investing. And today, I want to share with you, from my decades of experience, exactly how a beginner can start investing in stocks and avoid the mistakes I made as a young boy. I will break it down in 6 sections. Stay with me, because by the end, I'll tell you the single piece of advice I've given to my own family about investing. Section 1. What are stocks? When I was young, my father ran a small brokerage. That's how I got introduced to stocks. But let me explain it simply. A stock is not just a piece of paper or a number on your phone screen. A stock is a slice of a business. When you buy Coca-Cola, you're not buying a ticker symbol. You're buying a piece of a company that makes drinks millions of people enjoy every single day. That mindset changed everything for me. When you think of stocks as businesses, you stop chasing quick profits and start looking at long-term growth. Section 2. Why invest in stocks? When I was 19, I read a book called The Intelligent Investor by Benjamin Graham. That book shaped my entire career. Here's why I believe in stocks. Over time, stocks beat every other investment. If you had put $10,000 into the S&P 500 index in 1965 and reinvested the dividends, today you'd have over $2 million. That's the power of compounding. It's like a snowball rolling down a hill. The longer it rolls, the bigger it gets. And that's why I always say the best time to start investing is today. Section 3. How beginners should start investing. Now, let me walk you through how a beginner should invest in stocks, the Buffett way. Step 1. Open a brokerage account. Back in my day, you had to walk into a broker's office and call trades on the phone. Today, you can open an account on your computer in minutes. That's your first step. Step 2. Start with what you understand. I always tell people, never invest in a business you can't explain to a 10-year-old. If you eat McDonald's, shop at Amazon, or use an iPhone, you already understand those businesses better than you think. Step 3. Index funds for beginners. Here's a secret I tell my own family. If you don't want to spend years studying businesses, just buy an S&P 500 index fund. That single investment spreads your money across 500 of America's biggest companies. It's simple, safe, and beats most professionals over time. Step 4. Think long-term. In 1988, I bought Coca-Cola stock. People thought it was boring. Today, that boring stock has made Berkshire Hathaway billions of dollars. The lesson? Don't chase hype. Find good companies and hold them. Section 4. Key tips from Buffett's life. Patience beats timing. I once said, the stock market is designed to transfer money from the impatient to the patient. Don't worry about short-term ups and downs. Invest consistently. When I was young, I used to buy chewing gum, Coca-Cola, and sell newspapers just to save money. The lesson? Small, consistent investments grow over time. Avoid debt. In my 20s, I met people smarter than me who ended up broke because of debt. If you're using borrowed money to buy stocks, you're gambling, not investing. Reinvest dividends. Many of my investments compounded because I reinvested dividends. Let your money work for you. Section 5. Mistakes to avoid. I've made mistakes. Let me save you the trouble of repeating them. Don't panic sell. Remember my first stock at 11? I sold too early. If I had held on, I would have made much more. Don't follow the crowd. In 1999, the dot-com bubble was everyone was chasing tech stocks. I stayed away, and when the bubble burst, Berkshire Hathaway was safe. Don't ignore the basics. People try to outsmart the market, but investing is about discipline, not genius. Section 6. My final advice to beginners. If you forget everything else I've said, remember this. Invest in businesses you understand. Don't bet against America. The market has always gone up long term. If you don't want to pick stocks, buy an S&P 500 index fund and hold it. In fact, in my will, I instructed that 90% of the money I leave to my family should go into a low-cost S&P 500 index fund and 10% into short-term bonds. That's how much I believe in this approach. So, whether you're 11 years old, like I was, or 41 or 71, the best time to start investing is right now. Start small, be patient, think long-term, and let compounding do the heavy lifting. If you enjoyed this guide from my perspective, hit that like button, subscribe for more investing wisdom, and share this video with someone who wants to learn. And let me ask you, if you could own just one company for the next 20 years, which one would it be? Comment below. I'd love to see your answers. Remember, the stock market is not a casino. It's a place where your money works for you if you let it.